An economy is a living, breathing thing. It's meant to move, to flow. Goods, services, wages, and our very dreams, constantly circulating, growing. But what happens when that vital movement grinds to a halt? What happens when the gears seize up, the engines fall silent, and the vibrant hum of progress fades? Imagine a bustling highway suddenly frozen, not by ice, but by an unseen force, leaving vehicles stranded, not just idling, but going nowhere. Now, picture this. While everything is slowing, while factories are silent and job opportunities vanish, prices somehow continue their relentless climb. This isn't just a slowdown. It's a strange, unsettling paradox. It's like being caught in quicksand, where every struggle to move forward only pulls you deeper, and the cost of everything around you keeps getting higher. We're going to dive into the dark heart of this economic anomaly, a period when the world faced a crisis unlike anything it had seen before. A crisis that challenged every economic assumption and left a lasting scar. Get ready, because we're about to journey back to a time when prosperity and paralysis became terrifying bedfellows. In the neat, ordered world of economic theory, this shouldn't even be possible. For decades, the understanding was clear. Inflation, the rise in prices, usually came hand in hand with a booming economy. Lots of jobs, plenty of demand, money flowing. It was a sign of prosperity, a healthy economy heating up. And on the flip side, stagnation, a slowing economy, rising unemployment, flat growth, was typically associated with falling prices, or at least stable ones, as demand withered. These two states were supposed to be mutually exclusive, like night and day. You either had one or the other, but never both at the same time. But then the unthinkable happened. In the tumultuous 1970s, the world witnessed an economic Frankenstein, stagflation. The term itself, a stark marriage of stagnation and inflation, was a shock to the system. Suddenly, we had the worst of both worlds, stagnant growth and soaring unemployment combined with rampant runaway inflation that ate away at everyone's savings. It defied every textbook, every established model. Economists scratched their heads, politicians panicked, and ordinary people felt the squeeze from both ends. This wasn't just a bump in the road, it was an entirely new, deeply unsettling landscape, forcing a complete rethinking of how economies worked. The fuse was lit, not in a bank vault or a government office, but thousands of miles away, in the arid deserts where the world's most crucial resource flowed: oil. For decades, it had fueled the world's progress, a cheap, abundant energy source that powered industries, transported goods, and kept economies humming. But then, in a dramatic, almost cinematic turn of events, the tap was tightened. When the major oil-producing nations, forming OPEC, decided to use their immense power, the world held its breath. Prices didn't just inch up, they surged overnight. The cost of a barrel of oil skyrocketed, sending shockwaves through every sector of the global economy. Think about it. Every single industry, every factory, every car, every truck, every ship, every plane, they all depended on oil. When oil stopped flowing freely, when its price became exorbitant, it was like a sudden, massive heart attack for the global economy. Every gallon burned now meant $1 lost, not just for the consumer, but for businesses whose operating costs exploded. And as factories struggled to afford energy, they slowed production, which meant fewer jobs, and that meant a worker idle, a family struggling, a community feeling the chill. The oil shock wasn't just about gas prices, it was a domino effect that crippled economies and became a key ingredient in the stagflation stew. In the face of this unprecedented crisis, governments and central banks found themselves trapped in an impossible dilemma, a no-win situation that felt like trying to put out a fire with gasoline. On one hand, unemployment was rising, factories were closing, and people were losing their jobs. The traditional fix for a slowdown? Stimulate the economy. Print more money, make it easier to borrow, encourage spending. So, to combat unemployment, they fired up the printing presses, injecting more cash into the system. The idea was to get people spending, get businesses investing, and create jobs. But here's the cruel irony. While they were trying to fix unemployment, inflation was already raging out of control. Printing more money, while it might temporarily ease unemployment, also poured fuel on the inflationary fire, making every dollar worth less. And when they tried to tackle inflation, the conventional wisdom was to raise interest rates, make money more expensive, cool down the economy. But raising interest rates meant less borrowing, less spending, and inevitably more unemployment. Each cure, it seemed, poisoned the other. They were caught in a brutal tug-of-war, with every attempt to pull one problem down, only lifting the other higher. The choices were agonizing, the solutions elusive, and the trust in government's ability to steer the economy began to crumble. This wasn't just about abstract economic theories or numbers on a graph. It was about real people, real families, and the erosion of their sense of security. Stagflation had a profound human cost. Imagine diligently saving for years, only to watch the purchasing power of your hard-earned money vanish before your eyes. Inflation didn't just make things more expensive, it actively eroded savings, turning what felt like a secure nest egg into a shrinking puddle. Every trip to the grocery store became a disheartening experience, as prices for everyday essentials flipped overnight, making budgeting a nightmare. And then there was joblessness. Unemployment isn't just a loss of income. It's a devastating blow to a person's pride, their sense of purpose, their place in the community. Factory gates closing weren't just buildings shutting down. They represented dreams deferred, futures derailed, and communities hollowed out. A whole generation learned a harsh, unforgettable lesson: that trust in the stability of the economy, in the idea of steady progress, was not guaranteed. The optimistic post-war era of seemingly endless growth gave way to a new, unsettling reality, where even hard work and thrift couldn't protect you from the invisible hand of economic turmoil. The psychological impact was immense, shaping attitudes towards money, work, and government for decades to come. Decades later, as we navigate our own complex global landscape, a chilling sense of déjà vu occasionally flickers. The same warning signs, eerily similar to those of the 1970s, seem to reappear on the horizon. We see mounting global debt, nations and individuals alike living on borrowed time. We see a global economy where growth rates are slowing, struggling to regain the dynamism of past eras. And, perhaps most unsettling, we observe money being created and circulated at speeds that feel unprecedented, often faster than the actual wealth or productivity being generated. It's like watching an old movie, recognizing the plot twists but hoping desperately for a different ending. History, as they say, doesn't repeat itself in an identical fashion. It doesn't just play out the same script word for word. Instead, history recalibrates. It takes the old themes, the familiar challenges, and presents them in new forms, with new players, new technologies, and new complexities. The lessons of stagflation, the pain, the confusion, the policy blunders, they remain vital warnings. Understanding how we navigated those treacherous waters then, how we grappled with that economic paradox, is not just an academic exercise. It's a crucial roadmap for today, helping us identify the subtle shifts, the emerging patterns, and perhaps, just perhaps, allowing us to steer clear of another similar crisis. The ghost of stagflation continues to haunt economic policy, a stark reminder that prosperity is never guaranteed and vigilance is always required. Thank you for joining us on this deep dive into one of history's most puzzling economic periods. If you found this journey insightful, please give us a like, share your thoughts in the comments, and don't forget to subscribe to our channel for more explorations into the forces that shape our world. Your support helps us continue telling these crucial stories.